Welcome back, students. This is our second lecture for chapter number 8. Remember, I said in the last video that it is a long chapter. It covers many things and it is very important chapter. So just to review what we have discussed in last lecture, right? We covered slide number 1 until slide number 23. We looked at this example, the difference between product cost and a period cost. Also, we solved this example. Then what are the different engineering costs? Then how the manufacturing cost, the product cost, manufacturing cost or a product cost, it is same thing. How manufacturing cost flow into accounting system, right? From raw material to manufacturing, from manufacturing to finished good, from finished good to the customer, right? This is how the flow of the cost, right? And how this cost is reported in the financial statements, right? As we said that cost of goods sold is shown in the income statement. Inventory is the cost of the materials which were not sold, right? And expenses as incurred, we call them period costs, right? Product cost or this one, inventory, when it is not sold. When it is sold, it becomes cost of goods sold. This is what we already discussed last time. What is a different classification of a manufacturing costs, right? Their explanation for each of them. This is important just for your theory, in case if you have a final exam, you need to remember these information. Product cost and period cost, again same thing. This was the example, we looked at it. Classification of cost, when it is a prime cost and when it is a conversion cost. This is again some definition of raw material inventory, work in progress inventory, and finished good. And this is a summary of all cost concepts. And exercise 8.1, which is the one we solved last time, and then we stopped at this slide number 23. This was the last thing we looked at it last time. So today we are discussing slide number 24, another classification of cost for predicting the behavior of the cost, right? One you have seen before, that was how cost is reported in manufacturing system, right? How cost is reported, right? When it is inventory, when it is a period cost or product cost, how they appear in financial statements. Now this one only is to see what is the behavior of the cost, that how cost will react to changes in the level of activity. For example, before we were manufacturing 20 units, now we are manufacturing 40, for example, just double. Or we were, let's say, manufacturing 100 units. We were making, manufacturing means making, we were making 100 units and now it is 200 units as an example. So here we'll see what are the costs which vary means which changes. If we increase from unit from 100 to 200, what are the cost which changes and what are the cost which remains fixed, means does not change. As an example is rent of a building or rent of a warehouse, right? If we make 100 or 200 units, rent stays same, right? But the material will change. For example, the material used in one product or in 100 product is different than the material used in 200 products. So that is what we call it a variable cost, the cost that varies. Mixed cost as well, we'll see it, that mixed cost is a cost which has both variable portion and fixed portion. This is what we call it mixed cost. I'll explain later on slides more detail about these concepts. Volume index, this is an important concept in order to understand the behavior of the cost. Volume index means it is a unit measured used to define a volume. For example, for automobile it is a mile driven, right? How much mile is driven or kilometers driven, right? Mileage. Let's say next one is power generating plant which produce how much kilowatt hours produced electricity, right? How many parts have been stamped by a stamping machine, especially in mechanical engineering, or how many units are assembled if we have an assembly, this one, or how much machine hours have been used. So these are some volume, means what drives the cost. It could be a number of unit. So the number of unit is a volume index, right? Let's say cost of a material used in making car. It depends on how many car we make. So number of units is important to know what is the cost of the material. If you made 100 cars, the material you have used is different, right? So what is the volume? Number of car is the volume in that case. So moving to next slide, which is variable cost. Now variable cost is the cost that vary depending on the level of production or sales. This is what we call it, variable cost. Let's say cost of a material used in making this phone as an example, right? So if what is the cost of a material if there is 0 phone made? Of course 0, there is material cost will be 0. But if you use 10 phone, if you manufacture 10 units, so again whatever material you need for 1 unit, multiply by 10, right? So that is the cost of a material, you will have it. So cost that vary depending on level of production. In this specific example, it is, as an example, you know that let's say you, of course now texts are free, but there was a time when we have to pay money on SMS messages, right? So now number of text sends and what is the bill of each message, each texting, right? So that depends. If we send 0 text message, 0 cost, or for a material, if we make 0 phone, 0 material cost, right? So in this case, for a variable cost, cost increase or decrease proportionally according to the level of volume. So if cost of a material is 100 real for 1, right? Let's say, I'll just explain. Let's say cost of material, material cost, direct material cost per unit. Let's say cost of the material used in this phone is 20. Now, what is the cost of a material for 100 unit? For 100 units, how much it will be the cost? 220 multiplied by 100, right? So I'll say it is 2, right? 400 units. It is 2000. What if we have 200 units? What will be the cost? 200 times 20, it will be 4000. So this is what we call it proportional, right? If you double the unit, cost will be double, right? So variable cost changing. If you change the number of units, right? If you say we have 400 units, what will be the cost for 400 units? It should be from 200 to 400, so it will be double, right? Or you can multiply this by this, it is 8000. So this is what we mean. The variable cost, right, increases or decreases proportionally according to level of the volume. This is the definition of a variable cost. Next one, variable cost per unit. What is a variable cost per unit? This one is total variable cost, right, which is 0, but variable cost for 1 unit, which is this one, let's say 20. This remains same, is not changing, right? Per unit is same. What is this one? For total, this is total variable cost 8000, which changes depending on the number of unit, but the per unit, this one, This is very important concept. The per unit cost remains same, right? So this is what we call it in next slide, the variable cost per unit. Here it is same, right? Variable cost per unit is same. This is the example for text messaging. You can see it, so it's easy. Now another concept in variable costing is, we call it activity based, or we call them the cost driver or the volume. Means what causes the cost, right? Now cost driver is a measure of what causes the incurrence of a variable cost. What is the reason for the occurrence of a variable cost? Is it a number of units we produce? It depends again for your situation. Number of units produced. So this is how you say it's a variable cost. If something is changing, it depends on number of unit. So it is a variable cost. But if there is a cost which depends on the machine hours, you are using a machine, and there are some cost which depends on how long you run that machine. So in that case, machine hour is the cost driver for that variable cost, or it is a labor hours. It depends. Your cost depends on how the employee works. It means labor hour is the cost driver, or it's a miles driven or kilometer driven for a car. So if your cost depends on this one, then this one is our volume, or in other words, sometimes we call it cost driver. Next concept after variable cost is fixed cost. Remember, this topic now we are looking at it is a classification of a behavior of a cost. One behavior is a variable, means the cost changes, right, as per cost driver. Now sometimes cost does not change, right? If cost does not change, it is a fixed cost. It remains same, right? So this is, in reality, we call it cost of providing a company's basic operating capacity, and it remains constant, right? Maybe cost of rent as an example, right? Rent, this is just an example, right? Rent does not depend on, in this example, how many lab tests this laboratory has performed, right? So rent of the lab or rent of the building is same. So this is what we call it a fixed cost. So fixed cost stays same, right? Is fixed, right? But how about fixed cost per unit? Can you explain to me what I mean by fixed cost per unit? Let's say total rent of our class is room which we are using is 10,000 per month. Or I'll say per year. So this is the total rent, right? So this remains same regardless of the number of students. Let's say I want to calculate number of students or number of product, whatever our cost driver is, right? It does not depend on any cost driver. It is fixed, right? Let's say number of students is 0. What is the cost or the rent? It is same, 10,000. If I have, let's say, 100 units for my class or for the places which I have earned, it is same thing, right? So total rent or total fixed cost remains same. What about fixed cost for one student per student, right? It is how much? Can you calculate what is the fixed cost per unit? 10,000 divided by 100. This will give us a 1 unit cost, right? So if you divide it, it will be how much? Yes, 100, right? Dollar or real, whatever it is. So this is fixed cost for per student is 100. what if I have 50 students as an example, or 50 units? What is the fixed cost per unit? Will it increase or decrease? Of course it will increase. The fixed cost per unit increase for one student, right? You can calculate it here, right? How much it will be? Right, it will be 200. What if I have, so instead of 50 I have 200 students? In that case, what will be the fixed cost per unit? Is 50. Right, so this is an important concept again, which we'll look at it, right? Within any range, right, the per unit cost, right, what will happen to a per unit cost? It will decrease as you increase the number of units, or in this case number of minutes. If you increase the number of units, your fixed cost per unit will decrease, right? So how you can decrease your cost? One of the way in decision making, in case you want to decrease your fixed cost per unit, remember, total fixed cost, total rent is same, you cannot do anything. But what you can do is you can reduce the fixed cost per unit by producing more and more units. Okay, so this is again an important concept. So now we look at next question for more explanation of the same concept. 8.2. Identify which of these costs here are fixed cost, variable cost, and mixed costs, right? Now, first one is maintenance cost, direct labor cost, wages, depreciation of factory buildings, salaries paid to this one. So, advertising expense, cost of direct material, employee fidelity insurance, cost of electric power, sales tax. So, I want you to just solve it, just write it down in page in front of you. Just pause this video and see if you can identify them exactly. Can you identify them? Yes, just pause the video and see. Yes. Anyhow, this is the answer of what we said. Maintenance cost of vehicle used in supplying goods. It is a mixed cost. Why it is a mixed cost? Maintenance cost of a vehicles, now which are used in distribution or supplying goods. In maintenance cost, we remember sometimes you have mechanic fee which is fixed, plus the cost of let's say spare parts, qata ghayar. So it has both fixed and variable. Direct labor cost, this is variable cost. Direct labor means those labor who work directly on a finished product. Direct labor, direct material are always variable. This is very important. Direct labor, right? This is an important concept you need to remember. Similarly, wages are variable because wages are paid hourly. But if we have a salaries are fixed costs always. There is a difference between wages and salaries. Depreciation of factory building. Depreciation is fixed. We know how to calculate our depreciation, right? What is a depreciation? Cost of an asset divided by its useful life, right? For any asset, if you divide the cost of the asset of its useful life, so it is a fixed depreciation. Fixed. Salaries paid to quality control inspectors, it's a fixed cost. Advertising expense, right, it is also a fixed cost, does not depend on unit you produce. Cost of direct material is a variable cost. Insurance, tameen, is a fixed cost. Electric power is a mixed cost, right? Why it is a mixed cost? Electric power, electricity, we know that when you see your electricity bill, even you switch off your let's say meter, but still end of a month you get some cost. That is, let's say, for a meter rent plus how much electricity you use. Sales tax is a variable cost, right? Tax on sales, like the riba, right? 5% of which is a sales tax. So that one is a variable cost. That the riba depends on how much sales you made. If there is zero sales, there is zero sales tax. 8.4 also similar, very easy this question. Harris Company manufactures a product, right? And for 2015, for 2 output level, for if you produce 1000 units, this is the cost. If you produce 2000 units, this is the cost, right? Now if you look at the given information here, direct labor is 30,000 if we produce 1000 unit, and if we double the unit, what happened to cost? It also doubles, which shows it is fixed or variable. It is variable because it depends directly on the number of units you produce. We said before that the variable cost varies proportionally, right? If I go back to this slide here, right, increase or decrease proportionally, right? So if I come back to this question, right, which we are looking at it, so here, so it means direct labor is a variable cost, right? Material, before it was 20,000 if we produce 1000 unit. So if we produce 2000, cost becomes double, so it is variable. Overhead, this is very clearly variable, this is fixed. Selling, this is variable, and this is fixed cost. Fixed cost, you can see here, remains same, does not change on number of units you produce. Same here and same here, same thing here, same thing here. Now what is the question? Part A, total manufacturing cost. What is the total manufacturing cost? What is manufacturing cost or a product cost? You need to know. It is material, labor and overhead. That's it. If you add them, material, labor and overhead, means if you add this 4, it is your total manufacturing cost. Simple. Manufacturing cost for 1 unit, add these costs, this one only up to here, because this is not manufacturing. Remember, this is a period cost. Now add these all cost, right? Divide by 1000 or this divide by 2000, so you'll get some numbers, right? Also, what do you think per unit cost at this level and this level? Will it be same or different? What is your answer? Let's see later on. Now, what is total variable cost here? What is the total variable cost? So we look at here and see what are the variable cost. This is variable, yes. This is variable, yes. This is variable, yes. This is not variable, so it will not be included. This is variable, yes. This is not. So this plus this is a total variable cost. That's it. Total variable cost per unit. Again, this answer divided by the number of unit, 1000 will give you this number, and for this ones you do the same thing, divide by 2000, you get it. Total cost that has to be recovered if the firm is to make profit. Of course, they have to recover all these costs. You have to sell. Your sales revenue must be more than these costs. If you want to become a profitable, you have to sell more than this, or you have to recover these costs, right? All costs. If you add all of them, this is your total cost. So solution is on the next slide. You can solve it by yourself and practice, not difficult, very easy. All numbers are there, so you can solve it very easily. Any question? Just send me an email, we'll see it. Next one, 8.10. Again, you need to understand it. Similarly to what we have discussed before for variable and fixed cost. Procurement manager from a large merchandising firm has called your vice president for production to get a price quote for an additional 250 units of a given product. So procurement manager means purchasing manager from some large company, let's say someone from a Panda, because merchandising companies like Panda, they called your vice president and they need to, get a special quote, means what is the price, quotation, 250 units to a given product. Vice president has asked you to prepare a cost estimate, right? So the number of hours required to produce a unit is 4. It takes 4 hours to produce 1 unit, right? So average labor rate is 16 per hour. So can you calculate what is the labor cost for 1 unit? 16 multiplied by 4, 64 is the labor cost for 1 unit of a product, right? This is the cost of a labor. Material cost is 22 for 1 unit. Overhead is 40% of direct labor cost. Whatever you have your direct labor cost, 40% of that is the overhead, right? Remember how to calculate a manufacturing cost. You need to have material, right? What is the cost of material, cost of labor from here, and overhead. If you add these 3 things, this is what we call it a manufacturing cost or a product cost, right? So once you have your own cost estimate, right? Now the company want to have a 25% profit margin. So whatever your cost plus 25% is the profit, because you, of course, no one wants to sell it at a cost. You want to have a profit as well. So whatever your cost plus 25% is the total price to quote, right? Okay, so numbers are very clear, so you just need to plug in, right? So labor cost is 16 times 4 times 250, because we are producing 250 units in this example. So 250 times labor cost for 1 unit, 250 times material, and overhead is 40% of this one given in a question. 40% of direct labor is this one. So you have material as labor, material, overhead. If you add these 3, this is your total cost. Now what is your profit margin? How much profit you want? The policy of this company is that we want to have 25% of our cost as a profit. So this is the profit. So how much the price you should quote to a customer? So this is what you give it to your vice president. Okay, this is our cost, this is our profit, so this is the price you must quote. Means you must give it to that customer, 34,875. So now you have given this information to your vice president. Now it is up to the vice president if he can make a decision to give this price or more than this or less than this, whatever, based on some other things to make a decision. Remember, this is all about decision making process. So he has this information in front of him and this is the price he can quote to that customer. So I'm going to end my lecture here. Again, this is a long chapter. Please try to solve these questions in case you have a final exam if a situation improves. So this will be a very important chapter. So don't miss it. It will be a long chapter, but if you solve questions correctly, it is easy. Best of luck, and if you have any question, feel free to send me an email. I'll be happy to answer your questions.